Hey, what's up, guys? It's Larry, the mortgage guy, your mortgage insider, and certified veteran mortgage advisor. Right? I wanted to say thank you for being here. And today I'm very excited because I'm actually doing a new version of my class, VA Home Buying Basics, because I was actually invited to speak to a large group of veterans and members of a very large company. So I'm kind of practicing a little bit. I do this class probably maybe once every 2 months, but I did it recently, like maybe 2 or 3 weeks ago. So you might hear a repeat if you've been following me. But the reason I'm again doing this class is because I'm kind of rehearsing and practicing for the actual event that I was actually booked for by a veteran. So I'm really excited about that. So we're going to uh, wait a little bit for people to kind of show up, maybe a couple minutes. But if you do have any questions, you can always unmute yourself if you are on the Zoom, or you can always type the question in the stream, and most likely I'll see it and I'll address it the moment I see it. Okay. But yes, like I said, wanted to thank you for being here. This is VMA, or Veteran Mortgage Advisor Talk. I do weekly VA loan classes every single week. Well, actually every other week now during the summer, because I'm actually kind of seesawing between this and first time homebuyer classes. But I think once school starts, I'll be back to a normal schedule. So I'll be doing it once a week again. Right. But again, if you have any questions, just go ahead and you can unmute yourself or just ask in comments, and I'll do my best to address it. Okay. All right. So we started. All right. So again, we're serving those who served and sacrificed. And my name is Larry Lee with Open Mortgage, 832-606-2193. And you'll probably get the information later. Right. But wait to the very end of my class, and I'll tell you how you can save $500 off of your closing costs when you buy a home. And I give you like this little certificate and everything. So it's pretty official. Okay. Even had to get approved by corporate. Okay. Our mission is to fulfill President Lincoln's promise to care for him who shall have borne the battle, and for his widow and his orphan, by serving and honoring the men and women who are America's veterans. And today we're going to talk about VA loan basics, 100% mortgage financing for United States veterans from the VA. Okay. Now, I have a question for you. Does anyone here currently work with veterans? You can raise your hand and again comment, whatever. And of course, you can always answer that. Okay. But does anyone here currently work for veterans? Does anyone here currently work with veterans? The next question is, does anyone here want to work with veterans? Again, you need to give a show of hands, or you can comment. Could we all say that it's fair that veterans deserve the best possible real estate experience based on the sacrifice they made for our country, and we owe it to them to give them that? Does anyone, or does anybody agree with that statement? And just so you know, I actually put these in the slides because I literally never memorized them. And so I basically put it in front of me. And actually, I probably should be doing this. And I'm telling you this because this is live, right? But I actually should be doing this and not having you read the questions. But I might as well let you see the slides while I do this, right? So Ashley says, my dad is a veteran. I agree. Yes. Thank you, Ashley. And I appreciate you being on this call. Again, you have any questions, let me know. Okay. What we're going to do today is I'm going to teach everyone in this class how to provide the best possible lending, buying, and selling experience that we can offer our people who are so deserving of this benefit. Over the next few minutes, I'm going to share with you those techniques that I have tried, I have proven, and I've been trained on, and have learned through my years of experience in serving veterans at the highest possible level. So get comfortable and get your notepads out. We're going to dive right in, and we're not going to leave anyone behind. So do me a favor, if you do have a question, please feel free to interrupt me, because I want to make sure everyone leaves here with a deep understanding of what we're committed to do. And honestly, these classes are for you guys. So I want you to leave here with all your questions answered. If not answered, at least you can ask it and I can answer it later on once I do the research. Okay. So no matter what, you will get what the value you're looking for today. Quick bio. I'm a certified veteran mortgage advisor with the Larry Lee team at Open Mortgage. I've been a licensed loan officer since 2016. The funny story is, my wife and I were sitting down talking to someone, and they're asking how long she's been in the business, and I was like, a couple years, and she's like, it's been like 5 years. I'm like, holy crap, that means I've been in the business for longer than that because I'm the one who introduced her into the business, which apparently has been 60 years. So the time has flown by, right? I have a side hustle as a social media marketing coach and running my own ad agency, Robots LLC. The reason I bring that up is because I'm basically working to marry the two passions, where I'm trying to use my social media resources and abilities and focus and highlighting the VA loan because I think there's a lack of awareness to it. So basically, you're part of that project. Okay. I'm licensed in 10 different states: Arizona, California, Florida, Illinois, Indiana, Louisiana, Michigan, North Carolina, Tennessee, and Texas. My branch is licensed in 30 plus states, and I'm not going to read all those states. You can always take a look at the slides later or look at the replay. But basically, there's 60 plus % chance I can help you. Okay. MLS number is 1440741. My mission is that I love the mortgage business, but I was fed up with the lack of education and information clients were provided during the application process. So I created a first-time homebuyer coaching class for mortgage clients that provides instant access to answers to questions and simple explanations to the mortgage process and how to qualify. Basically, I'm trying to create like a Netflix for the mortgage business, right? For people to be able to learn on demand. Okay, they don't have to interact with anyone. They don't have to engage with anyone. They don't have to talk to a salesperson or a loan officer or a real estate agent. If they want to learn, they can get it all online. That's my goal. Okay. I also provide one-on-one coaching for those who want it. Of course, if you do want that, you can't ghost me. You actually have to reach out and we have to connect. And more than likely, I'm going to have to know who you are. Okay. Unlike other loan officers, I made it my passion to coach first-time homebuyers on the mortgage process, and that makes all the difference of how I've helped hundreds of people get on the right path to home ownership, and many of them becoming homeowners. You remind me of meeting my smart, successful, and savvy clients who are now homeowners because you are taking the right step on the home purchasing process by educating yourself and being prepared like they did. The home buying process is very confusing. Most people, the home buying process is very confusing to most people, but that is why I am here to simplify the process and make sure you are 100% prepared in the home buying process and to become ahead of the competition in this insane market, like the fully underwritten TBD pre-approval that we can offer by offering 500, and we also offer 500 off towards closing costs for buyers. Again, if you went to the end of the class, I'll explain that to you. But the TBD process, basically, we fully underwrite you to the fullest extent without having a property, and then we get you conditionally approved. That way, when you make offers, we can give a commitment letter or a conditional approval saying that you've actually been underwritten, and that therefore will probably close a lot faster, and your offer is almost as good as cash. Okay. All right, so that's my certificate. I'm very proud of it. It's pretty much the only time I'm able to provide, I guess, exposure to this. Someone asked, aren't all VA loans zero down? Actually, the answer is technically yes, but there's VA loans you can get where you actually put a down payment. And I'll actually get into that. I'm really glad you asked that question. It's a great question. Aren't all VA loans zero down? Depends. Okay. All right. My why, of course, my wife and kids, especially my two boys, Bruce and Hunter, because they're on the spectrum for autism. So I'm working towards getting them enrolled into ABA therapy. So basically, a lot of my efforts are basically geared towards achieving that goal. A lot of my friends who are parents to children with autism have enrolled their kids to ABA therapy, and they swear by it. So definitely my goal. That's my why for them, and of course, helping veterans. And I explain that pretty clearly here in my Facebook post here. My father was living in Da Nang, Vietnam during the fall of Saigon. My mother lived in Saigon. My father left by helicopter, my mother by boat. It was U.S. soldiers who helped them get in the helicopter and on the boat. They met in Hong Kong, China. If it wasn't for U.S. soldiers, my parents may have not survived, met, and had me, and I wouldn't have had what I have today. I might not even exist. Those U.S. soldiers are veterans now, most likely. And thank you, vets. I owe you my life. Basically, it was U.S. soldiers who rescued my parents when the fall of Saigon happened, and they had to evacuate Vietnam. And it was on U.S. ships that they escaped on. So if it wasn't for them, my parents would never have met, because they met in Hong Kong at a refugee camp. And if they hadn't met, they wouldn't have fallen in love, and I wouldn't have been born, and therefore my children wouldn't be alive. So I basically owe them everything. So yeah, I really, I feel like I owe to the veterans. So this is my way of giving back. Right. So what is a VA home loan? A VA home loan is a mortgage guaranteed by the U.S. Department of Veteran Affairs and is issued by a private lender such as a bank, credit union, or mortgage company. The VA does not finance VA loans. They only guarantee it in case of default, which is why they outline who qualifies based on their requirements and guidelines. So basically, what I mean by this is a lot of people think it's the VA that's actually providing the funds or paying for the house for the veteran. The VA is simply guaranteeing, they're basically saying, we will vouch for this veteran if they were to default, but us lenders are still the ones who provide the funding for these houses. Okay, so it's important to know that because that's how they kind of determine, who they're willing to guarantee. Okay, so that kind of leads to the whole: aren't all VA loans zero down? Technically, yes, but there's actually VA loan purchases where down payments are required. Okay, and also. If you read my title to the class, is how to get both zero down and 500 off. That's the point of the class. Okay. All right. So before we get into that, I want to talk about opportunities and why being a veteran or helping veterans is a great idea. Okay. Millennials, Gen Zs push VA loans to a record in 2021. Millennial and Gen Z veterans accounted for more than half of all VA purchase loans in a record year for this historic benefit program, according to National Mortgage News. Gen Z in particular is starting to make its presence felt in markets across the country. And that's why you picked a picture of a bunch of U.S. soldiers taking selfies. It's like veterans who are definitely Gen Zs, right? Non-veteran millennials struggle, veteran millennials thrive. And despite many non-military millennials having a tough time buying homes, often saddled with student debts and working to save for a down payment, millennial and Gen Z veterans accounted for half of all VA purchase loans in fiscal year 2020, according to Chicago Tribune. So many millennials are stuck on the sidelines because they don't have great credit, they don't have a savings for a down payment. They continue. Younger veterans and service members are really ahead of the curve when it comes to home buying compared with their civilian counterparts. Now, I want to kind of break that down a little bit. They're saying that millennials are stuck on the sidelines because they don't have great credit and they don't have the savings for down payment. Well, that's why the VA loan is so great, because the VA loan actually technically does not have a credit score requirement. That's a lender overlay. So lenders are the ones who are requiring that, but the VA does not have a credit score requirement. And of course, there's zero down if you qualify as a veteran, right? So they don't have to be concerned about having a savings for a down payment, even though statistically speaking, they actually have more funds than the average civilian, oddly enough. So they don't need a down payment, but they usually have more for a down payment than normal buyers. And when I say normal, I'm talking about non-military, right? VA loans outperforms all other loans in 2021. Today, VA loans actually close at a higher rate than conventional mortgages. For all home purchases in 2021, 70% of VA loans successfully closed compared to 51% of all mortgages, according to LMA, a mortgage application software company. And they're being utilized more often as well. Data from the Department of Veterans shows that the number of VA loans went up 8% year over year in 2021, marking the 10th consecutive year of growth. And LMA is actually, they're the ones who created Encompass, which is like a loan origination software. I would say is like the Windows of loan origination software. So they definitely have a lot of data. VA loans are more flexible with buying power. The VA loans typically have lower interest rates than conventional mortgages, allow for higher debt-to-income ratios, lower credit scores, and they don't require private mortgage insurance. If you can qualify, the VA loan is the best program out there. And these are a few things that makes the VA loan one of my favorite loans, okay? Because they typically have lower interest rates, which means less money paid towards interest and more reserve, or it could be used towards buying a house, so basically bigger houses. They allow for higher debt to income ratios. Again, the fact that they allow more flexibility with your debt to income ratio, that means you can buy more house per dollar, because debt to income ratio basically means how much money you're making versus how much you're going to spend, right? Well, if they give you a higher debt to income ratio, they're giving you more threshold or a larger debt to ratio, therefore you can buy more house. Okay. And lower credit scores, of course, because it's easier to buy, right? So those are the few things that makes me like love the VA loan, because I wish everyone could qualify. You can't, right? But that's actually one of my favorite reasons why I fell in love with the VA. Okay, opportunity. So there's the military is USA's largest employer with over 3.1 million employees worldwide. Over 1.4 million VA loans were originated in 2021. Veteran homeownership exceeds the national average by 20%. What that means is if you compare veterans to civilians, the percentage of those populations, it exceeds by 20%, right? So let's say, I don't know, 50% of all veterans own a house. They're saying that only 30% of civilians own a house. And, those numbers are wrong, but I'm just giving you an example of what that means. Okay. Military personnel continues to be relocated every 2 to 5 years, and career service members move numerous times, which means repeat purchase business. And this is for your real estate agents, right? Basically, if you work with veterans, you're probably going to have a lot of business because they're constantly moving. Okay? Texas had 1,435,787 veteran residents in 2021, and the number is climbing. Texas also had 34 billion of VA purchases in 2021. 28.2% of Texan veterans have a service-connected disability. And the reason I'm talking about Texas is because of course, I'm located here. But the numbers you'll probably see are pretty staggering no matter where you're at. Okay? And the reason why I talked about the service-connected disability, because some states, like Texas, does take that into consideration and provides possible tax benefits if you have a service-connected disability. Okay? Now, this is probably one of my favorite slides because it's one of the reasons why I do these classes. Okay, only 24% of qualified veteran homeowners are currently using their VA home loan. Okay, so let me repeat that. Okay, what I'm saying is that out of all the veterans who own a home, only 24% of them are using a VA home loan, right? Which makes no sense to me. Like, how can 100, let's say 100 veterans own a home? How can only 24% of them be using a VA loan? That makes no sense, right? Something must be wrong. Okay, less than 5 years ago, only 12% of veterans who qualified were using the VA loan benefits, but it's slowly growing due to the growing awareness among internet savvy veterans, meaning veterans are starting to discover and learn about the VA loan, or they're hearing about it, or more people are talking about it, or there's just more information accessible, and therefore the amount of veterans who qualify are starting to be more aware and use the VA loan. 33% of veterans that have a mortgage indicate they did not know about the VA program. Okay, let me repeat that. 33% of veterans that have a mortgage indicated they did not know about the VA program. So that means out of 100 veterans, 33 of them didn't even know the VA loan existed. Okay, 1/3 out of 3 veterans, 1 of them didn't know about the VA loan. That is ridiculous. How is that possible? How does a person serve the country and not know that they have the benefit of buying a house 0 down, right? I mean, everyone should be talking about this to veterans. Like, if you are a real estate agent or a loan officer and you know a veteran, you should be telling them about the VA loan benefit of being able to buy 0 down. But apparently, 1/3 of all veterans didn't even know about it. Okay, and 46% of veterans reported their lenders had not brought up the VA loan option. So this one is what pisses me off. Okay, so out of 100 veterans that went to buy a house, almost half stated that their loan officer didn't even mention the VA loan. Almost half, 46. So out of 100 loan officers like myself, 46 of us did not even bring up the VA loan. Okay, why? Right? That makes no sense whatsoever. You're literally screwing veterans over by not telling them other options. Okay, so veterans are being hurt. Veterans are buying houses incorrectly. They're putting money out where they shouldn't have to, right? And they're probably paying taxes that they shouldn't be paying if they're like in an FHA loan or a conventional loan. There's things that could be happening that should not be happening towards veterans because 46% of loan officers did not even mention the VA. Okay? So again, this is one of the reasons why I do this class, because I'm trying to bring awareness. I don't care if you work with me or a loan officer is learning or watching this. I don't care. We just need to bring more awareness to the veteran community about this. And my hope is to change that 46% to a lower number. Okay? So 3 mandatory questions if you're taking the application. Right? And this is 3, but in reality, I think you should ask maybe 1, maybe 2, and then you can move on. But if they do answer yes, then of course you should ask all 3. The first question is, are you or your spouse a veteran? Why is it you and your spouse? Because even if you are not a veteran, if you are married to a veteran, you might qualify, especially if you are a surviving spouse. That means your spouse who was a veteran died of a service-connected death, right? Then you might still qualify even though you are yourself not a veteran. And that's why it's important to ask, are you or your spouse a veteran? Okay. Number 2, are you entitled to disability from the VA? Of course, this is the question I would ask if someone did indicate that they're somehow connected to the veteran community, whether or not they're a veteran or they've been married to a veteran, etc. Okay. And number 3, do you have a certificate of eligibility yet? Right. So again, these are the questions that I think you should ask all veterans, of course, but you should ask all applicants the first question. Okay. Benefits of the VA home loan: 100% financing. And again, someone asked, aren't all VA loans due now? I'll touch upon that because technically, yes, but there are VA loan purchases where a down payment is required. Okay. No PMI, as in no program mortgage insurance. There's no cap limit, meaning there's no maximum, right? So that's something that I actually learned recently. It's funny because I learned about it, but I didn't really know all the details. But I know now, no loan cap limit means if you qualify, it will be financed 100%. That means if you qualify for $1 million, doesn't matter what the loan county loan limit is, the conforming loan limit. If you qualify for $1 million, the VA will guarantee that. I mean, if you qualify for $1 million, the VA will guarantee the $1 million purchase. Okay, like they're guaranteeing $250,000. Right, so there's no loan limit. There's some details and nuances to that. Basically, you have to have full entitlement, a clean entitlement, meaning you're not using it. It's not your second purchase. It's your first purchase. Or if you purchased the VA loan before, you've already reinstated your entitlement. You've already cleared it. You've already paid it off, whatever, right? But yes, there's no maximum in terms of the VA loan if you qualify. Right? That means job-wise, income-wise, credit-wise, etc. Okay, and of course, there's lower interest rates, which of course another one of my favorites, except because lower interest means more money reserved for buying a house. Okay, so how to qualify for a VA loan? A veteran is eligible for VA home loan if he or she served on the active duty in the Army, Navy, Air Force, Marine Corps, Coast Guard, or Space Force after September 15, 1940, and discharged under conditions other than honorable after either serving on active duty for a period of 90 days or more, any part which occurred during wartime, serving on active duty for a period of 181 days or more during peacetime, serving on active duty under Title 10 or Title 32 orders for a period of 9 days with at least 30 days being consecutive, or served 6 good years in the National Guard or Reserves with 16 points and receive an honorable discharge. Now, those details I always reserve for a deeper conversation because it gets pretty detailed, and I don't even understand how it works. I just know what I'm reading, right? So that's something that would have to go beyond. I would say that you have to talk to your service provider when I say service provider. I'm talking about the people that you're working for. If you're a veteran or you're currently doing military service, you have to ask them for that information, and they will kind of break that down. Okay, but I do have a little chart here. So if you served during World War II, peacetime, Korea, post-Korean, Vietnam, post-Vietnam, and Persian Gulf, then based on these dates, you would be eligible. And then, of course, all other eligible people is if you're an active duty member, you had 90 continuous days, like I said earlier. If you're a reserve or National Guard, 6 years with 16 points. Again, that's something that they provide. If you're unmarried surviving spouse, okay, that means you were married to a veteran and they died because of an active duty or service connected disability, and you're unmarried. Now, the catch is unless you remarried after the age of 57. Okay, so that means, let's say you're 56 and you were married to a veteran, and then they passed away because of service connected or active duty related death, and you married someone right away before you turn 57, you will not qualify for the VA loan. Okay, but if you were married to them, turned 57, and then married someone, then you would qualify. Okay. I've never done a loan like that before, but that's how I read the guidelines, and that's how I was coached and trained. Basically, if you remarry after being turned 57, then you can still qualify for being a surviving spouse. Okay, and a POW/MIA spouse, veteran must have been POW or MIA for 90 days. Okay? All right, certificate of eligibility, which of course us in the veteran mortgage advisor community called the golden ticket. Okay? This document from the VA is the document from the VA that confirms your eligibility for VA home loans, obtainable through e-benefits or directly from the lender. Documents needed to obtain a COE is active duty, statement of service or current orders, active duty veteran DD 214, National Guard NGB 22 and NGB 23, reserves, statement of service, and point statement. Now, I've actually had clients who were trying to receive the COE on their own or certificate of eligibility on their own, and it was taking longer than normal, like over a week or whatever. We as the lenders can pretty much get it immediately, right? So if you need help with the COE or certificate of eligibility, and you want to get it right away, whatever, just talk to your lender and they can provide it for you. Okay, most likely they have things in place where they can provide it for you pretty much right away. Okay, so this is what the certificate of eligibility looks like. Again, we call it the golden ticket, right? Because it tells us everything. Right? It provides any and all information required to determine veterans' eligibility. There's two distinct factors to consider: the eligible, meaning the veteran earned the VA home loan benefit, and qualification. Veterans qualify by their credit and income. It is possible to be eligible and not qualify. It is also possible to qualify and not be eligible. What that means is that you might have your full entitlement, but you don't qualify because you have income or your credit is not where it needs to be, right? Or you actually might qualify altogether, but you're not eligible because you've already used up your eligibility, or things in the past has happened, like maybe you got a foreclosure and your entitlement is still not reinstated, right? So it takes both for it to work. Now, I might actually touch upon this later on in another slide. Well, there you go. This is where I can talk about the zero down question that Facebook user, which I don't know who that is, but they asked, you can only have one VA loan at a time. That's not true. Okay. It all depends on your entitlement. How much do you have left on your certificate of eligibility? Okay. So that means, and I'm going to give you an example. Okay. If you have a $200,000 house that you bought with a VA loan, and let's say the county loan limit is $500,000, that means you can actually go and buy another house for $300,000 and still put zero down. That's two VA loans at the same time. Okay. Again, example. Let's say it's a $500,000 loan limit. You have a VA loan at $200,000 already. You can go and buy a $300,000 house with VA and still pay zero down. Now, of course, it depends on where it's located at. There's things like that needs to be determined. Although I was able to help a lady buy a house with a VA loan. Actually, I didn't help her with that one. She bought it with someone else, and then she bought a second primary home, a home with a VA loan within months in the same area. It wasn't like 100 miles apart or another state. It was in the same area. It took some work, but if you have questions about that, ask me. But what seemed to be impossible, meaning having two VA loans at the same time in the same area, literally within months, which of course it is most likely impossible. There's ways to get around it. Okay. But I have proven that you can get more than one VA loan. Okay. Now, about the down payment thing. If the loan limit is $500,000, and let's say you have a $200,000 house and you want to buy a $400,000 house. Okay. So hear me out here. Again, I'm going to try to use simple math. Okay. Like fractions almost. Okay. If you have a $500,000 loan limit, you already have $200,000 on another property. That means you have $300,000 that they're willing to guarantee for zero down. But you want to buy a $400,000 property. So you have $300,000 left, but you want to buy $400,000. Then what happens is that because the loan limit is $500,000, they will guarantee the $300,000. But anything above that, you have to put a down payment for. And this is where the question, aren't all VA loans zero down? No. Okay. In this case, because you are above the county loan limit, in terms of how much your entitlement is used up, you have to cover the excess, right? But only 25%, because that's how much the VA guarantees, right? So basically the VA is saying, we want the entire property to be guaranteed by 25%. We're going to cover the first 300 because that's what you're entitled to. But the extra 100,000, that goes beyond your entitlement. So you have to cover the 25%. So basically 25% of the remainder would be a down payment. So in that case, it would be $100,000 excess. So $25,000 down payment, right? So basically you're buying a $400,000 house with $25,000 down payment because you're covering 25% of the remainder or excess, right? So hopefully that math makes sense. And maybe I have to do a class where I actually write it out, whatever. But again, you have $300,000 left on your entitlement because of the county loan limit. You want to buy $400,000. $300,000 will be covered by the VA. That's what they promised you because you have $300,000 left. The other $100,000, it's on you. And they require it to be 25% because they're guaranteeing 25%. So 25% of $100,000, $25,000, $400,000. Okay. So no, not all VA loans are zero down. Okay? That's one example. There's another example as well. If you're foreclosing on a low VA loan, you can never have another one. Again, I talked about this. If you bought a home using the VA loan and you still have entitlement on top of that, then you can still use the remaining entitlement. So again, that example of the $200,000 house, right? I didn't mention it, but let's say that $200,000 house, the reason why you still have entitlement is because it was foreclosed upon. So you foreclosed upon a $200,000 purchase, which was a $200,000 loan. So therefore, out of $500,000 county loan limit entitlement, you lost $200,000 because you have a foreclosure, right? So in that example, you can still buy a $300,000 house. You know what I'm saying? So to answer number two, no. If you're foreclosed upon a VA loan, you can never have another one. That is false because it depends on your entitlement or what you're eligible for, what you have left. Okay. Now, of course, if your county loan limit is $500,000 and you bought a house at $500,000 using your full benefit, and you foreclose upon that, then yes, there's no more entitlement to you. So therefore, VA loan doesn't exist because there's nothing left for the VA to guarantee for you because you've already maxed out. Okay. So it depends, right? But the truth of the matter is it says you can never have another one. Well, no, it depends on how much you have left on the certificate eligibility. So that's why it's the golden ticket, right? The VA loan has a max loan limit. I talked about this earlier. If you have full entitlement, most likely people who are buying or using the VA loan for the first time, there's no loan limit as long as you qualify. Literally no loan limit. Like that was shocking to me, right? Because it sounded too good to be true. Like it sounded like it didn't make sense. Like it wasn't logical. So I was like, oh, there has to be some sort of catch. No, there's no catch. If you qualify for $1 million and the county loan limit is $10,000, which will never happen, you still get to buy the $1 million house because there's no max loan limit with the VA. Okay. It's called the Blue Water Bill. Okay. So yeah, that's kind of a big thing. Tier 2 entitlement. Again, I talked about this earlier. Can I have more than one VA loan at a time? Yes, we will calculate the remaining entitlement based off your COE and determine the max loan amount with zero down. Can the loan amount be higher than the maximum loan amount determined? Yes, a down payment will be required. I guess I spoke ahead of myself because, of course, I've already talked about this. And can I apply for a VA home loan after foreclosure? Yes, 2-year waiting period before veterans can be eligible again. Entitlement from home was foreclosed upon will not be restored. Extenuating circumstances can be shortened, the wait period to 1 year involving a manual underwrite. Now, technically, you can always pay off the foreclosure and get your entitlement back, but most people, they're like, why would I do that? I'd rather use my funds towards the new house, right? But you can technically pay it off, right? So funny enough, I answered my question before I even saw the slide. So sorry about that. Restoration of entitlement. VA loan can be used more than once. Full restoration of entitlement requires payoff of existing VA loan and transfer of title. And veteran must obtain the new COE, right? And it's kind of crazy because I've actually seen COEs or certificate of eligibilities that show that the house that they already sold was still on there. There's a way to go in and mark that your house is sold, and they'll actually refresh it. It's all like done online, which is really cool, right? Now, I'm not encouraging you to do that if it's a lie, right? If you still have your house, don't say that you sold it. That's a lie, right? But if you sold it and it hasn't been updated, you can actually ask to update it by clicking this house or this property is no longer, I sold it. It's been paid off, right? Then you're going to get a newly refreshed, updated, up-to-date COE, right? So yeah. So funding fee. This is something that a lot of people don't really understand or talk about, but basically it's a fee that the VA charges because of the usage of the VA loan. Now, what does this ultimately mean? It means that they're trying to offset the potential losses they may occur if they were to deal with a lot of defaults on the VA loan. Because let's put it this way. Although we do our best to not put loans out that won't qualify, it does happen. People do default, right? Veterans do default, just like normal civilians do default. Okay. In fact, the percentages is that there's a higher default rate for FHA and conventional than it is VA. Just by the way, right? So the VA is the better performing loan across the board. Anyways, because of default, they have to pay stuff out. They have to pay the guarantee, whatever, right? So in order to make sure that the VA is funded and protected, they charge a 2.3% funding fee for the loan amount. Okay. So for example, on a $500,000 loan, that's going to be $11,500. Okay. That's for the first use. Subsequential use or second use, that means if you use the VA loan again, the second time or more, then they charge 3.6% of the loan amount. So in this example, $500,000 would equate $18,000 of fee. Okay. But if you have a service-connected disability of 10% or more, or you're a Purple Heart recipient, then you don't have to pay the funding fee, right? Meaning it's waived. Now, the cool thing is, if you are in the process of getting a disability claim and you haven't quite received everything yet, and you're in the process of buying a house and you're closing your house, if that claim is awarded, you will get a refund for your funding. So let's say you paid the $11,500 funding fee, right? And you're in the process of claiming disability and you actually get it approved, then we will actually, the VA will actually refund you that $11,500. Okay. So kind of a cool little feature. And it's kind of cool that the VA is willing to do that. Okay. So yes, there's exceptions to the funding fee in general, and there's nuances to the funding fee, not across the board the same. Now, again, Mr. Facebook user was like, aren't all VA loans zero down? This is an example where it is not. Okay. Joint loans. And this is probably one of my biggest ahas when I became a certified veteran mortgage advisor. I did not know that this loan existed. In fact, I've actually spoken to VA lenders about this loan and how it's structured, and they say that's wrong or that's impossible. I've talked to people who are very confident. I say, hey, you actually can buy a house in this structure. Like, no way. So the structure is a veteran and a non-married co-borrower, like a girlfriend or a boyfriend, right? And I've had this scenario or a question asked me before, and I would deny them incorrectly. And I actually am very ashamed and embarrassed that I've actually turned people down, not knowing that this existed. Okay. Basically, you can have a veteran and a non-veteran that's not married to the veteran purchase together, and they call it a joint loan. Sounds logical, right? So basically, most VA loans require the veteran and the spouse to be married, right? Because it's a government loan trying to support the veteran and their family members. Being married makes you family, right? So technically, if you're a boyfriend, girlfriend, you're not married. And in this case, there's lots of other, not just, it doesn't have to be a boyfriend, girlfriend. It could be another co-borrower of that has, no whatever relationship with you, right? Meaning like a dad or a brother, right? I'm not, of course they have a relationship, but I'm talking about like the marital type of relationship, right? The point is, in the past, I said no, because you have to be married to the veteran, and that's simply not true. You can have a joint loan. The joint loan basically treats it like two different loans. Okay, so I'll give you a really rough example. Let's say you're buying a $500,000 house, and you have a veteran and you have a non-married boyfriend. The veteran would have to qualify for 50% of the house, $250,000, and the non-married boyfriend, who's not a veteran, would have to qualify for the other 50%. Right? Now that's that's one part. The other part is the down payment. Again, Mr. Facebook usually aren't all VA loans down zero down. Not this one. Okay. In this case, the veteran doesn't have to put anything down, but the non-veteran, non-married spouse would have to put a down payment. Okay, meaning they would have to cover their half of the guarantee, which is 25%, right? Because the VA loan will not be approved unless 25% is guaranteed. So basically you split it in half, okay? Because if the purchase of the house is supposed to be guaranteed 25%, well, the veteran's part is covered by the VA, but the non-veteran is not covered. So they have to come up with it. So 12.5% is the rough math. Now, the math doesn't really add up to that, and I don't like to do public math. It's actually a different number, but that's the concept, right? The concept is you're going to buy a house with a VA loan. It has to be 25% guaranteed. That means 25% possible equity, right? That's the whole point of the VA loan, to guarantee lenders 25% equity on that property that they're buying, okay? So because the 25% guarantee is required, the VA is willing to split it. I'll cover half, and you, the non-veteran, the civilian buyer, has to cover the other half, which is 12.5%. Okay, so if you're buying a $400,000 house, well, we'll cover $200,000 of the house. No down payment required. But non-veteran civilian buyer has to cover their 200%. The boyfriend has to cover their 200%. So they have to come up with 12.5% of the 200,000. Well, actually, no, that's wrong. They would have to come up with 25% of 200,000 or 12.5% of the whole thing, right? I'm really bad at math, like I said. But basically, the whole picture is they need to come up with half of the 25% guarantee, because 12.5% is going to be covered by the veteran because the VA is vouching for them, and the other 12.5%, they're not a veteran. So they have to come. So 12.5% of the total loan amount, or 25% of their half. But the half thing is actually a little complicated. It's just how we qualify people. You don't need to worry about that. You need to worry about the fact that they need to come up with their half of the guarantee, which is 12.5%. Roughly. It's probably like more like 14, 15, 16%, but that's just the concept, right? So yes, you can buy a house with a VA loan and still have to put a down payment. So thank you for asking that question, Mr. Facebook user. You helped me prove my point a little bit stronger. But the requirements here, as you can see, a loan other than a veteran spouse, for example, veteran fiance, veteran relative, you must get a prior authorization of the regional loan center, the RLC, right? Which is basically like the people you talk to at the VA to make sure things are okay with this loan, right? And this process with this application. Down payment required. I already talked about that. A veteran fiance who intended to get married prior to closing will not be treated as a joint loan. Entitlement must be held as a veteran spouse. So let's say you're applying, you're a veteran, and you are engaged to your husband, and you guys are going to get married before the home closes. Well, we don't look at it as a joint loan. That's your husband, or your wife and husband, right? Wife, veteran, husband, or you could be husband, whatever, right? But you guys are engaged to be married, and you're going to get married before you close the loan. So on paper, you are a married couple, when you're buying the house. Okay, so therefore it's treated like a normal loan. And when I say normal, veteran spouse, no need for a joint loan, no need for 12.5% down, yada yada yada. Right now, I don't know why you wouldn't do that. Why you would have tried to avoid buying as a veteran spouse. I don't know. Maybe title. I don't know. I don't know why you would do that. But just so you know, if you do plan to get married before, like you officially, the date is going to be before closing the house, then you're considered a normal VA loan, meaning veteran spouse with no down payment and not considered a joint loan. Okay. Now, this is an important nuance. Income strength of the non-veteran cannot compensate for the income weakness of the veteran. So what I mean by that is you can't have a veteran that has no money and they're marrying, or they're not marrying, they're buying with a joint loan partner who has all the money. That's not how it's going to work. It has to be at least matching, right? So the veteran has to definitely qualify for their part, no matter what. Right? It can be the other way around, right? Meaning the veteran can cover the weakness of the civilian because again, all the VA cares about is the veteran side, really. Okay, so the veteran qualifies to pay for everything, meaning the non-veteran spouse, non-veteran, non-married spouse has no income, doesn't matter to them, right? But it can't be the other way around. It cannot be the veteran has no money, no income, and it's the non-veteran, non-married spouse that has all the income. That's not how it works. Okay? So that's kind of important. All right, so VA loan products. There's a traditional mortgage, 30, 20, and 15 year. There's a cash out refinance. You can pull up to 100% of your loan's equity. Pricing is traditionally higher, anything above 90% loan to value. An IRRL, IRRRL, and trust me, you got to get that right because the people in the veteran community will get mad at you if you spell it wrong, but it's an IRRL, IRRRL, and it makes sense because it's interest rate reduction refinance loan. Let me say that again. Interest rate reduction refinance loan. That's why there's 3 R's, right? So an IRRL is extremely refinanced, limited documentation, and there's no appraisal required, which is kind of cool, right? It's basically an easier way to refinance. And there's a VA renovation loan. Similar to the FHA 203K loan, it allows the borrower to refinance purchase price and home repairs, must have documentation provided by a licensed contractor, and interest rates are traditionally higher with this product. Okay. So why work with a veteran mortgage advisor like myself? Well, actually, I'm going to go ahead and you don't need to read this, but you'll get the slides later on. But basically, I invested money, energy, and time to become a certified veteran mortgage advisor. Okay, I'm proud. I take it very seriously. It's in my designation and on my name and official title. So basically, I call myself Larry Lee, VMA, right? I teach VA loan classes on a weekly basis because I'm that passionate about helping veterans in our real estate community become more aware of how important it is for us to be educated and utilize the VA loan. I even teach other loan officers. In fact, a lot of loan officers attend my calls and they are literally my competition, but I let them be here because if they help a single veteran using my knowledge I gave them, I did my job. So basically it's residual, right? If I teach a loan officer about the VA loan and they use that to go help a veteran, then I consider that me helping a veteran. Okay? So I don't mind. Okay, that's how much I care about the veteran community. Okay? Out of all VA appraisals that did not meet value, only 1% were submitted for an ROV, meaning a reconsideration of value, which resulted in at least 50% success rate. That means out of 100 lenders, only one tried to fight the appraisal. I'll be that one. Okay? More than half of lenders don't even talk about or ask for the COE, or certificate of eligibility, when speaking to a veteran buyer. I make it the first thing we do. I actually talk about, do you have a COE, certificate of eligibility, what to say? If they don't have it, do you mind if I get it for you? Et cetera, et cetera, et cetera. So one of the first things that we address whenever I speak to a veteran. Okay? Almost half of lenders don't even mention the VA loan to veterans. I ask all our participants if they are veterans so that I can mention the VA loan. What I mean by that is I want to find out if they are a veteran because to me, that makes the most sense. Why would I ask them if they're a the veteran, because if they're a veteran, then that solves the funding question. Do you have any funds? Well, they have to have some funds, but I'm not so concerned about funds anymore because it's zeroed out. So it actually helps me to find out if they're a veteran or not. I don't know why loan officers wouldn't ask. It's kind of crazy. I do not charge a full 1% on the VA loan. I use the collective method, which charges a flat fee for all VA loans, actually for all loans in general. This allows the veteran to pay for other fees if necessary, like the pest inspection, so that the seller and or other parties do not have to worry about anything. This also prevents the veteran from overpaying. Now, what does that mean, overpaying? If I have a VA loan client that's a $200,000 loan, my fees are still like under $1,500. I think it's like $1,300, right? But let's just say it's under $1,500. $200,000 loan. If my client pays or buys a $400,000 loan, my fees are still under $1,500. If my veteran client buys a $1 million house and he gets a $1 million loan, my fees are still $1,500. Okay. So flat fee lenders who charge 1% across the board, there's people that they're overcharged because they're doing the same job. Let's be real here, right? $1 million loan is the same thing as $200,000. Really, in terms of the work involved. Okay, so to charge 1% on $1 million, it's overcharging that veteran. So I do not do that. Okay. I insist on writing a letter accompanying the VA loan offer to explain my credentials and how well qualified the veteran is based on their pre-approval, and also insist on calling the listing agent to introduce myself and show why they should accept our VA loan offer. I will literally fight for the veteran to get into the home they want. And most loan officers don't even call any listing agents on any loan. I'll call on all loans, including VA. If possible, I will have my team do a fully underwritten TBD, to be determined pre-approval, where we underwrite the application to the fullest extent without having a property. So we conditionally approve the veteran before they even make an offer and go under contract, with conditions being the property appraisal and final approval from the VA. This allows for faster closing times and a lot more confidence and peace of mind for all parties involved. We call this the power play. Like all veterans, we're trained to be prepared to serve and protect our country. We will provide the same effort to them and protect their loan. And actually, this slide I want you guys to see. Maybe next time, because I'm practicing, I might just leave the slides because I think it's good for you guys to see what I'm saying. Right? The Certified Veteran Mortgage Advisor Community, managed by the Veteran Lending Council, is a national network and a brain trust of like-minded individuals with one mission: to serve the veteran community at the highest level. My VMA community will not allow me to mess up a VA loan, let alone do a disservice to any veteran. So accountability is guaranteed. Basically, because I'm a certified veteran mortgage advisor and I'm part of the veteran mortgage advisor community, I'm not allowed to screw up a VA loan. That's why you should work with the certified veteran mortgage advisor, because there's plenty of loan officers out there who do screw up the VA loan, and they get no repercussions for it. They kind of sweep it under the rug and act like it never happened. That will not be kosher in my network. Okay. Also, I offer an opportunity for all my clients to save $500 towards their closing costs. The requirement is to take a simple home buying quiz that will help you pass if you need it. If you're interested in learning more, let me know. And last but not least, I care. So, any questions? I'm pretty sure the people who are streaming, I don't even hear. They're probably like, the question is, what's up with your audio? And again, I'll just read you this class. Unfortunately, that my audio sucks. That's something I usually check, and I didn't check today, so I'm kind of upset with myself for that. No questions? Okay, great. Well, I really appreciate you guys being on this call. Of course, I am always available for any questions later on. And, I will be doing these classes every single week. So you always join me for the next class if you do come up with questions. To me, the VA home loan is the loan other buyers can only dream of obtaining. You've earned this right by serving our great nation. And it's my job to facilitate your dream of homeownership. So thank you for your service. If you want to know my future classes, I usually talk about myth busting. Myth busting is always hard for me to say. Basically, the 6 major myths that a lot of home buyers as well as real estate agents have about the home loan. And that's basically like a series that we do where we basically address each myth and basically dispel them, show how it's wrong. Okay. If you want more information, you always call me 832-606-2193. Email me larry@openmortgage.com. You can go to my website, larry.com. Actually, that's actually not my website. That's like my link tree, whatever. Or you can Google Larry Lee, the mortgage guy, or Larry the mortgage guy, and you'll probably find it. I actually made sure of that, right? So again, I really appreciate you guys being on this call. If you have any questions, just let me know. This is Larry, the mortgage guy, your mortgage insider and certified veteran mortgage advisor. See?